Hey, I'm Miller Hoffman, and welcome back to another installment of Pocket Size Advice. Today's topic is cash is king. What does it even mean to hear about cash, and why is it king? And maybe why is that not the best way to look at things, at least from an investment perspective? We constantly see pictures, movies, we read about it, of the cash falling from the ceiling or the stacks that we see all over the place in the banks or in rooms in movies. But what does that actually look like for you as an investor, especially thinking long term? One of my favorite quotes from Warren Buffett is about cash, in fact. Now, I'm going to butcher the quote here a bit, but the gist is if cash is sort of like oxygen, when you don't have it, it's the only thing you can think about. Now, how do we balance that from an investment perspective? I think about things in two main ways: safety versus security. On the surface, those two ideas sound very similar, but let's unpack this a bit in more detail. Safety entails the comfort that cash gives us. It allows us to pay our bills, it allows us to thwart any unforeseen expenses that hit our way, along with funding short term goals, like maybe buying a home or saving up for something that we know we're going to purchase in the next couple months. It makes us feel safe. We can see it. In this case, we can even hold it, or we can easily see it in our bank account. We know that dollar doesn't change too frequently. Security is looking at it from a different perspective, though. Just investing or keeping all of your money in cash does not provide you much future security, and the numbers bear that out pretty clearly. If we rewind the clock all the way virtually 100 years ago to 1926, if we would use cash, which in the investment sense we consider physical cash, things like money markets or high yield savings accounts, along with things as short term, things like short term T bills, treasury bills to be exact. If we look at 1 month treasury bills over the last 100 years, if you would have put a dollar in about 100 years ago, that dollar would now be worth about $24. On the flip side, if we took that same dollar and invested in the American stock market, I'm using the S&P 500 here just as a reference, so America's virtually 500 largest companies, our dollar would have turned into a little over $1,000. It's a really considerable impact. Now, it's unfair to judge those just on face value alone. One involves taking, at times, significant risk, and the other is pretty predictable. But we also leave ourselves quite a bit of opportunity on the table if we aren't finding that good balance between safety, but also thinking about future security. If that's something you're thinking of, if you feel like you have too much in cash, maybe too little in cash, and be looking to more earmark towards future goals, strike up a conversation with us here at TradeWinds. We love to help find that balance of what's the appropriate amount for you to have in cash, which is super important, while also thinking about your future selves. Would we rather have $24 in our pocket or a little over 1,000? That would be the main question I would want to leave you with. For the best ways to utilize that and exploring a partnership with us, we'd love to talk.